Proceeding on with the afternoon sessions, we have first up Ryan Singer, who is CEO of Domus Tower. And Ryan is an accomplished entrepreneur, leader in the Bitcoin sector. He was the co-founder and COO of the largest American Bitcoin exchange, TradeHill Inc. Domus is bringing decentralized network ledger technology to the heart of the securities industry, and we're delighted that Ryan can take the time to speak with us today. Ladies and gentlemen, would you please give a warm round of applause to Ryan Singer. Ryan, thank you for taking the time to be with us today. Hello and welcome. Could you give us a bit of an understanding about your business and who your customers are, please?
Absolutely. So Domus is my new company. We just started in August, and I'm actually spending a lot of time on Australian time because my co-founder is in Melbourne. And what we've been working on is we're taking decentralized technology like the Bitcoin blockchain, and we're using it to allow banks and broker-dealers to be able to trade securities with each other with the hopes of disintermediating kind of everything behind the bank or the broker-dealer. So we want to get to a world where there are no transfer agents, where there are no registries, where there are no custodian banks, where every broker can bring their customers straight to the deepest markets in the world without fees and without problems.
And who exactly are you disintermediating?
Basically, all of the back office infrastructure that exists in the securities industry behind the broker dealers and banks that you do business with. So there are stock registries. Some countries have centralized registries. Some countries use private companies for that. America uses a private company called GDCC. There are transfer agents that tracks who has which shares for which company. There are custodian banks that actually custody the shares that generally offer trust to the transactions. There are a lot of players behind E-Trade or Schwab when you do a trade. And each one of them gets the little cut of the transaction, and each one of them is doing their own little process. And you add it all up, and you're paying $10 a trade, and the transaction takes 3 or 4 days to post, even though you're doing the same basic thing that everybody's been doing in the securities industry for 200 years, which is just buying a share for personal investment.
Bankers love the phrase clip of the ticket. It's been the lifeblood of the industry for hundreds, if not thousands of years. How are you clipping the ticket, and what is your business model?
So we're doing business directly with the banks and the broker-dealers. And generally speaking, what we're going to do is we're going to make money when people take their assets out of our system. So ideally, the bank and the banks and the broker-dealers use us instead of using the traditional mechanisms, and we grow over time and we build enterprise value. But if they don't, if they want to use us just to execute a trade and then move it outside of our system, that's where we'll make our money. And
I mean, obviously, do you have a sort of volume-based transaction model? Is there some scale to in terms of the revenue for you guys?
I can't get too much into the weeds about that stuff until after we launch, but ask me again in March.
We'll invite you back for the conference next year for sure. Okay, what regulatory hurdles are you facing?
Well, so there are differences between the regulatory hurdles for Domus and the ones that I faced at TradeHill and the ones that most people in digital industry face. Domus moving into an industry where, depending,
just hold you there for a second. We just got caught by the Skype screen freezing. Could I just get you to? We're just going to try and refresh the screen here, Ryan. Bear with us a second. My biggest fear of Skype has just come true. I think it's better to just close it down, start again, than have to listen to pixelated audio and video. So bear with us while our friends in the AV desk busily try and get us back. And if I may plug the NBN obviously. My apologies for that, Ryan. Can you hear us?
Yeah, I can hear you.
Sorry.
I think that was mine.
No. The screen froze just as I was asking you what were the big regulatory challenges you face. So could we perhaps start with your answer to that question again, please?
Absolutely. So the regulatory difficulties that I'm facing at Domus are actually very different than the ones that I had at TradeHill and the ones that are facing most of the digital currency industry. So at Domus, we're dealing with live securities, we're dealing with banks, we're dealing with broker-dealers. We'll be regulated in different countries by entities like the American SEC and FINRA, the self-regulatory organization for broker-dealers and things like that. That's going to be the regulatory framework we're going to have to survive with them. But at TradeHill, it was a much more up-in-the-air question. I think for the digital currency industry in general, it's a much more up-in-the-air question. And it gets kind of back to where the origins of financial regulation and kind of how they're done. If you look at how banks are regulated in general, how it works is for a national banking system, you have a central bank like the American Federal Reserve or the Australian Central Bank. Have correspondence accounts and things like that. In order to run a bank in a country regulated that way, you have to, very large banks have accounts at the Federal Reserve, and then they run their own accounts as well. And the sum total, the net effect of their accounts, has to equal how much money they have on deposit at the Fed. And then, and those are the major money center banks. And then littler banks from that have accounts at the money center bank, and then they have their sub accounts at their bank. And the net effect of their accounts has to equal the amount they have on deposit at the money center bank. And so you have the entire banking industry is kind of this upside down pyramid, right? Where on the bottom is the central bank, and they're the basis that everybody's on. And then there are a few institutions that have accounts with them, and a few institutions that have accounts up. And the whole thing's enforced by audit, where every few months, the base institutions audit the institutions above them to make sure that their total books fit within the money they have on account at their bank, right? So you have this atomic center of trust, the central bank. And then everybody else has to be overseen by them, because that's where trust comes from, is it radiates out from that atomic center, from the central bank. And that's how America works. That's how the banking system in Australia works. It's more or less how the banking system in Europe works. You're also examined in Europe by the nations, not just by the European Central Bank. But this is the basis of what it means to hold somebody else's money in our world today, right? And this is, even all the payment processes and stuff like that, they all live within this world somehow. All this money is being kept in bank accounts that are audited and examined and insured by institutions related to the federal government and the Federal Reserve. And that's true in every modern country. That's what banks are. Digital currency, like Bitcoin, especially Bitcoin, doesn't get its trust in the same way. Bitcoin has this very public central ledger, and everybody can see it, and it's generated by this vast decentralized process that everybody's a part of, and it can only be edited by adding new transactions that are authorized by the keys related to that account. So all of the things that you're worried about in the normal banking system, that someone's cooking the books or something like that, and that you have to fight when you do the auditing thing, that stuff doesn't exist in Bitcoin. In Bitcoin, there's a public ledger, everybody can see it, it is the central bank. And every transaction to it is signed by the account in question, by the account that's being debited, and posted directly for everybody to see. So when you talk about regulation, when it comes to digital currency companies, it's important to note that Bitcoin itself exists kind of outside of the framework that we traditionally think of as banking. And thus, it might bear a different regulatory approach. And so when I was at TradeHill, we launched on March 18th, 2013, which was the same day that FinCEN issued their guidance that said, if you're an exchanger of virtual currencies, we're calling you a money transmitter and we'd like you to have an anti-money laundering program and we'd like you to know who your customers are and fight terrorist financing and stuff like that. For the first time, regulatory framework for digital currency companies. And the fact that they used these terms that had a meaning in the old banking system, like money transmitter, instead of coming up with new terms, kind of confused the issue, I think, for a lot of us. Because when it comes to Bitcoin, you don't have to count to make sure you have the money, right? You can have a Bitcoin account that the user has, and anybody can check the ledger, and it's either there or it's not there. And there's no way, if it's your account and you have the keys, someone else can in any way dirty your books, right? Nobody can place holds. Nobody can conceal the money that's there. Nobody can transfer it out without your consent. Same framework. We're starting from a different basis, and it's fundamentally a basis that's lower cost, right? Because it's not based on auditing every institution from the base and working your way up to the fringes. It's instead every account is under continuous audit all the time by an automated network, and it's really the transaction authorization that's decentralized, and it's the transaction authorization where all the risk lies, where people have their own keys, right? So when we get to regulating this space, things that I would be concerned about and things that I would think about aren't so much like the capitalization of these companies or the ownership structure of these companies or the banking arrangements of these companies. All these are normal money transmitter things to be worried about. But it's possible to structure these things. In fact, many people are moving in this direction where they don't actually hold any keys and they're not actually holding anything of value to the users, and they're only involved in a transactional payment processing basis. And so what I think about more within regulation is, are you holding other people's keys? If so, why? Do you have a security framework around that, like the PCI compliance framework and things like that? It's a different game than traditional financial regulation. And it's a game that's much, much more oriented towards technical standards and security best practices and things like that than it is towards the traditional model of insurance and capitalization and regulatory oversight.
Has your view on Bitcoin changed significantly, since 2013?
Yeah. Wow, I can hear myself now. Anyway, yes, it has. In 2013, when we launched this, we were pioneers, right? We were the first institutional exchange worldwide. We were the first place where you could wire us $1 million and get Bitcoin, or send us Bitcoin and get $1 million out. And we had to kind of pave the roads, and establish what people should think about and things like that. We helped found the first self-regulatory organization for Bitcoin companies called DATA, the Digital Asset Transfer Authority. We met with all the regulators in California and New York and in the federal government. And we called in for regulators in other countries, although not in Australia. And it was early days. Now, as we're moving forward with the industry, it's been a couple of years, and it's there are more mature things, right? People are starting to realize, first of all, you can't be like Mt. Gox. You can't hold other people's money without a good reason. So the whole exchange industry is moving over to segregated accounts with multi-signature providers, getting the exchange out of the business of holding people's money and having it go through the clearinghouse only at transaction time, which is going to be a big deal. Other things that we're thinking about right now is having decent security models at the consumer level. So a lot of companies right now are wallet companies. They're dealing with malware, they're dealing with phishing. Stuff like that was really only on the horizon when we started. And yes, I'd say there's a lot to think about. And really, it's coming down to not holding other people's money without a good reason. It's coming down to having good liability insurance, having good security best practices, and most importantly, engaging with the regulators that want to write policy here but don't really know what they want to write.
Okay, thank you for that. And can you give us an example of, or tell us some stories about your engagement with the regulators? Do you find their level of knowledge varies somewhat?
I think it varies by jurisdiction, who's really working on it. The best ones are the ones that don't think they're clever, that don't think they're smart, that don't really think they have all the right ideas, because they're the ones who ask the most questions and the ones who do their homework. They end up following up on those questions and doing research and coming up with real solid proposals. Um, I think the most interesting engagement that I had was I was talking to an esteemed attorney who did business about money transmission in the States and some of the regulators who he had introduced me to. And the question came up, money transmitters are regulated in this country when they hold other people's money, and there's a concept of permissible investments. When you hold other people's dollars, you're only allowed to hold them in certain types of accounts. And generally, it's about how much risk is exposed. You can't take somebody's money and throw it into a small cap stock and have the price go up and down, and then when they ask for their money, I'm sorry, I lost it, right? So what they say instead is permissible investments are, for example, federal treasury bonds, certificates of deposit, things that are stable in value, that there's a ready market for liquidity for. And he asked me, is Bitcoin going to be added as a permissible investment? And if so, and if not, are you going to have to hold not only other people's Bitcoin when you're doing so, but also an equivalent amount of dollars held in a permissible investment? And if that's the case, then there's not a single Bitcoin company that exists that's well capitalized enough to do so. You look at Mt. Gox, they were holding $500 million of other people's money. They didn't have $500 million in cash. And it'd be ridiculous to ask them to raise it. The venture environment just wasn't there and still isn't there, not for that amount of money. And it would be a ridiculous misuse of capital to do so. So these kinds of rules that, again, were written for a world, the purpose for the permissible investment rule is it's really to say that money transmitters can't be fractional reserve banks. They have to be full reserve banks. But with Bitcoin, it's not really the right framework. It's not really the right way to think about it. What you should think about instead is how do you structure the smart contract so that you're not able to transact on the other person's Bitcoin outside the business process.
Got it. Thank you for that, Ryan. I'm very conscious that we've got about 10 minutes left. I'd like to open up the floor to questions. We've got a roving mic here. For the benefit of Ryan, could you state your name and organisation? But do we have any questions here? We've been a bit pixelated with your audio, Ryan, but we've got most of it. And any questions, folks?
Hi, my name is Ivan Zazarski. I'm a partner at Deloitte & Touche and a former colleague from Silicon Valley. I have a question in terms of the paradigm of blockchain is so much greater than what is being utilized at this moment in time. And you've taken the next step in the new venture in bringing it forward for interoperative trades. Where do you see it going next?
So what blockchain was attempting to do, it was to move us away from central repositories of truth, right? So right now, when you buy a house, you go to a title agent for your county, and they're the repository of truth for who owns what real estate. The same thing exists for cars. The same thing exists for stock. The same thing exists for money. There's this idea that that verifying these databases is the job of auditors who work for the government, and that truth comes from law. Blockchain is the other way. Truth comes from transparency and proof of work. So with that in mind, that'll allow us to move kind of all of these different notarization schemes to something that's truly verifiable instead of something that you trust because you trust the politicians overseeing it. So I think what we're going to move to is a world where the government is no longer the arbiter of what's true, where what is true is obvious from the internet. And truth is a network service just like routing.
Question, Ivan. Do we have any other questions, please?
Hi, Sam Lee from Bitcoin Group. Prior to doing Bitcoin Group, we were doing arbitrage between exchanges and monitored, for instance, Bitfinex pegging themselves to the Chinese exchanges for liquidity. So when Trade Hill starts back up, do you guys envisage doing the same thing to ensure there's enough volume on your exchanges?
So I'm no longer involved with Trade Hill. If I get involved with another Bitcoin exchange, or if I start one, how to bootstrap volume is an interesting and important question. So the reason that you see prices diverge from one Bitcoin exchange to another is because they're not fully liquid between each other. They are for Bitcoin, but getting dollars into and out of these exchanges has historically been very difficult because banking for these exchanges has historically been very difficult. And so one way that we did it at Trade Hill was we actually had float at Bitstamp and Mt. Gox, and we ran a level 2 order book. So people who did business on our exchange, if they could get a better execution from another exchange, we gave it to them. I think you'll find this stuff become more and more common as Bitcoin exchanges become more and more well capitalized. But at the end of the day, what's going to make liquidity worthwhile in the Bitcoin market is you're going to start seeing institutional exchanges with solid banking arrangements, maybe even run by banks themselves.
Yep, that's a fascinating comment, Ryan. Thank you for that. In the absence of any other questions, and I'm conscious that we are reaching our time, I'd like to say we'll wrap it up there. But ladies and gentlemen, would you please join with me in thanking Ryan Singer for his time today? Thank you very much, Ryan. We appreciate your time.
Thank you. You guys have been great. Australia.
Thanks, Ryan.